$5,000 cash in your hand right now, baby. What if that happened? Do you know how to turn $5,000 into massive upside and improve parts of your life massively? Many people have started their life's fortunes with less than that. But the first number one question is what to do early on with that money to put it to best use. Today, let's learn about the absolute best ways to spend $5,000 to improve your life, your future, and your wealth. For those that don't know me, my name is Nick D'Angelo with Saint Investment Group. We currently have over 200 million in real estate assets under management, and we are currently raising over 100 million more to buy more real estate assets. If you find yourself with an extra $5,000 in your pocket or in your bank account, then first off, congratulations. Maybe you received a tax refund, won a prize or something, or maybe you just sold something to get that cash. No matter what happened, you have a bonus stack of cash that you have access to that you can improve your financial circumstances if you do the right things. While there are many different financial situations, here are some of the best must-dos with $5,000 in your pocket. Number one is you must pay off debt first. If you owe money on, let's say, a credit card as a worst case example, this is a great time to pay off or reduce that balance. If you're making the minimum payment on your credit card every month, you are paying an astronomical amount in interest, and you will be dragging that debt around for a long time to come if you don't get it under control now. Instead, use that $5,000 to get rid of that debt burden. Overall, what you're looking for is to pay off your highest interest rate debt that you have to your name. Then you go down the list and you start paying down the next highest rate debt that you have to your name. Obviously, don't miss a loan or debt payment at all any of the months because it will crush your credit. And oftentimes there's also penalties associated with missing payments, but you ideally want to go down your list of whatever's charging you the most every month for your debt. The next place to spend that $5,000 is to create an emergency fund for yourself. Now, this is an interesting one because this advice is super widespread. Sometimes people just straight up ignore it even though they hear it all over the place. But don't ignore this one, guys. Having an emergency fund of some kind is essential. The reality is emergencies are going to happen, not if, but when. Your car is going to break down or it's going to need new tires. The plumbing will need a repair and you'll have a big leak that messes stuff up. Or even one of your kids is just going to need glasses. The unexpected is absolutely going to happen, so expect the unexpected. If you do this and you prepare for it, life will be significantly less stressful for you knowing that you have that money ready to go to cover the things you need to. The alternative is borrowing that money or putting it again on the credit card that we just talked about. Remember those massive credit rates that you're trying to avoid? Not having an emergency fund can put you at the mercy of those credit card companies and produce a very, very expensive debt that will last a long time. Of course, it's also possible that you could lose your job or sick or disabled enough that you're going to need to live on that emergency fund for a period of time. That's why even the best financial advisors will recommend keeping enough money in your emergency fund to cover at least, let's say, 3 months of expenses. There are some more extreme that will say up to 6 months of reserves to have on hand, but for the sake of this video and budgeting, 3 months is a good metric. $5,000 is not enough to cover that, but it might be a really good start. And once you begin, keep adding more until you reach the goal you're looking for. And that $5,000 can buy you something even more valuable. Peace of mind so that you can focus on other areas in your life without worrying about unforeseen events coming up and knocking you down. For me personally, I have a bunch of kids and we're a single income household. So I take this lesson extremely to heart and have multiple layers of emergency cash at any point. Typically, I'm holding a good chunk in cash and additionally structure my finances so that several lines of credit tied to assets that I could draw down if something really catastrophic or hugely unplanned happened. The question is, why am I so conservative? Because once in a previous business that I had, I lost 2/3 of my net worth in a single day. Yes, that's right. I woke up that day, that morning, and that day looked like any other day. And by the time I went to bed that evening, I lost 67% of my life's work. It completely disappeared in one day. And while the story behind that is much longer than what this video has time to cover, I can skip till the end and tell you the lessons that I learned from that grueling experience. I learned that diversifying was a literal lifesaver. If I hadn't done the diversification I did and had the multiple different investments that I made, I could have lost my entire life's work in that single day. But I was able to keep 1/3 of what I had because I had invested in different things and I had moved that money into different areas that were less at risk. The next move with that $5,000 that you got in your pocket is to invest in index funds or ETFs. That $5,000 windfall you could grow by investing into mutual funds, ETFs, etc. that mirror one of the large stock exchanges and indexes. This is probably the best way to maximize your gains as a small investor by basically just letting someone else do all the hard work here. ETFs are designed to duplicate the results of major indices, which gives you two benefits. One is reliability, and one, it's typically pretty lucrative. You likely won't earn as huge of the returns as you could from a single investment, but you can expect to enjoy steady growth throughout that period, and it's close to impossible to lose your entire investment. Typically, there are dozens or even hundreds of companies that stock make up that ETF. So you're extremely protected by buying those ETFs. Don't think that's valuable? Well, let me remind you of all the crypto bros of the last handful of years. Has anyone checked on them? We should probably check on the crypto bros, right? Make sure they're doing okay. Most probably not. Many received zeros on their investments. That's right, literally going from something to nothing. This is crippling when you run the numbers on what this looks like portfolio-wide. And yes, that means that there are things out there in the investment world that can completely wipe you out of the game and completely destroy your investing to zero. So ETFs offering more diversification and more stable returns is a blessing in this context. For my personal ETF portfolio, I am extremely boring, guys. I literally only invest into 4 ETFs. One is the Dow Jones, an ETF that covers the entire Dow Jones. 2 is the S&P 500. 3 is the Russell. And 4 is NASDAQ. I just buy ETFs that cover those entire indexes so that I know I'm achieving massive diversification and spend almost zero time choosing individual stocks while also getting the benefits of each one of those market indexes. It's a pretty big opportunity, and no, I don't make a single dollar by telling you that. And the next and the holy grail of what to do with your money is invest in real estate-backed investments. All right, so let's be real. That $5,000 that you got in your pocket probably isn't enough for a down payment for a real estate investment, unless you also have some equity to leverage or some additional cash that you have available to you. However, you can invest that $5,000 into a real estate investment trust or into a real estate fund. This allows you to tap into potential significant returns from real estate while not having to do all the work yourself anyways. This is a huge advantage to you since you don't have to actively manage the property or manage the property managers or handle any of the leasing hands-on yourself. And an additional benefit is it still allows you to get started investing in real estate so you can start learning about it and getting the wheels turning. REITs and funds have been growing in popularity for over 60 years and now comprise over a $3.5 trillion segment of investment options today. If you do your diligence and you can find something available to any size investor, including small investors just starting out, it shows how valuable REITs and funds can be to the new little guy. Some focus on different markets or different strategies, which is where a little bit of your own research will come into play. If you think a strategy is going to perform better than something else, or an asset's going to perform better than something else in real estate, you can invest in REITs or funds that focus on those. And once you have that $5,000 working and growing for you, you can start considering branching into other potential investment avenues. But again, I literally cannot stress this enough. Get involved in real estate now, however you can, however you need to. The more you learn and understand about the benefits of investing in real estate, the more sophisticated, better you will be able to find better opportunities down the road. While REITs and funds can be amazing investment options, the truth is that the end goal is to invest in the big leagues of real estate. And this inevitably is going to mean investing into the highest return projects with the biggest tax benefits you can. To unlock these massive investment opportunities, most often you're gonna need to be what's called an accredited investor. I'm putting up a video next to me now that goes over the definition and the details of what an accredited investor is and how you too can also become an accredited investor. With this knowledge, you can figure out if you're already accredited, or you can move towards becoming an accredited investor and then giving yourself access to the amazing projects to invest in, either with us at Saint or other many amazing operators that exist in real estate today. Check it out. What is an accredited investor? How do you become an accredited investor? Why should you become an accredited investor, and what are the benefits to being so?